Welcome. My name is Linda Williams. I am a community outreach and training manager with Consumer Action, and I am so happy that you were able to join me today. Now, before we get started with today's webinar, I would like to tell you a little bit about the wonderful agency that I work for and share some of the great work that we are doing. So, what do we do at Consumer Action? As it says on the screen under Welcome to Consumer Action, through education and advocacy, we fight for strong consumer rights and policies for underrepresented consumers nationwide. At Consumer Action, we enjoy a national reputation for creating multilingual consumer education materials in the field of credit, banking, privacy, identity theft, insurance, and utilities, all of those kitchen table pocketbook issues that impact you and your family. In fact, today's webinar was created using key information from three of our most popular training modules: identity theft and account fraud, disaster assistance, and specialty consumer reports. At the end of the webinar, I will provide you with links to these modules. Now, let's get started. When a disaster strikes, guess what? So do thieves. According to FEMA, after a disaster hit, con artists, scammers, and identity thieves flood into the disaster area. What are they looking for? They are looking for money making opportunities. How? By taking advantage of you, the victim, left shell shocked, dazed, and confused by the disaster. And what are they looking for? These thieves, scammers, and con artists are looking for your PII, your personal identifiable information, your PII. These con artists and scammers and thieves, they will try to obtain your PII in a number of different ways by shifting through debris, looking for personal items you may have left behind when you were forced to flee the disaster, maybe run for your life, or when you had to evacuate your home because it was no longer safe by looting, just helping themselves to your personal items, or by posing as a governmental official, the IRS, or a state building inspector. Remember, state and local federal officials will never ask you for money. They will never charge you an application fee to obtain disaster relief. These scammers will try and get your PII by pretending to represent a charity. The goal of those fraudulent, charitable solicitation phone calls and fake emails that you will get over and over and over again is to collect your PII. Scammers will try and obtain your PII by impersonating an inspector or an insurance agent or a bank representative, even a FEMA inspector. Once these opportunists get a hold of your PII, they can use it in so many ways that'll make your head spin. For an example, they can use your PII to commit identity theft, mortgage scams, disaster relief scams. They would even apply for, they will use your PII to sign up for FEMA disaster relief benefits before you have a chance to do so. Don't be victimized twice. Don't be a victim of a dishonest service provider. Another scam that follows a disaster is the contractor scam. The goal of the so called contractor is to convince a homeowner that a large deposit must be provided before any work can begin on their home. Frequently, after the money is paid, the job will start. They'll start the job, but they will not complete it. Unfortunately, the con artist will never be seen or heard of again. So let's take a brief look at identity theft and how it can wreak havoc on your finances. So, what exactly is identity theft? Identity theft is the theft of certain elements of your personal identifiable information, your PII. It occurs when someone steals your name or your social security number, your mother's maiden name, your driver's license number, your medical information. They begin opening up new accounts and making purchase or even to get your tax return. There are so many different forms of identity theft and fraud, including some lesser known schemes that you probably haven't heard of. But guess what? They all wreak havoc on your financial life is undetected. So here are a few forms to look out for, but most important, what you can do if it happens to you. account takeover. That's what they call the new normal, synthetic identity theft. Now, this is one of the most hardest forms of identity theft to detect. Then you have medical identity theft. It is not only a dangerous crime, but it could threaten not only your financial health, but your physical health as well. We are right in the middle of tax season. One of the most common methods used to obtain electronic information is phishing. Phishing is a scam, not fishing with a bait and a hook in a lake, but a phishing scam is a technique used by identity thieves to gather personal and private information by doing what? Sending false electronic communications to you that appear to be legitimate, like they're coming from the IRS or they're coming from Bank of America. But if you click on that link and fall for it, they take on all of your information. Criminal identity theft is another form of identity theft that's very hideous. Most consumers will find out that they are a victim of criminal identity theft when they apply for their job and they fail a background check. Now, child identity theft is extremely vicious as well. A research report created by Javelin Strategy and Research found that more than 1 million children were victims of identity theft in 2019. But let me bring this point to 2021. Many parents learned when they were denied COVID 19 stimulus benefits that their child was a victim of identity theft. Now, identity theft don't just stop after death. The thieves don't know anything about rest in peace. A thief may use a deceased person PII to drain accounts, set up new loans, or apply for government benefits. Now, when you're on Consumer Action's website, I want you to type in ID theft fact sheets in the search bar and download our easy to print fact sheets on the various forms of identity theft and follow the steps in those fact sheets to protect yourself and your family against identity theft. Now, let's take a closer look at some of the different forms of identity theft. I told you that account takeover is the new normal. Well, since COVID-19 outbreak, this form of identity theft has just taken off. And if you notice on the screen, mobile phone account takeovers are on the rise. So you have to make sure that you secure your mobile phone. So what exactly is account takeover? Account takeover is an online form of identity theft. It occurs when a thief gains access to your account log and credentials, your username, your password, and they take control of one or more of your accounts without your knowledge or permission. At that point, the thief can use the account just as you would. They got your login credentials, they can use it exactly the way that you do to transfer money, to take money out. In 2019, ATO accounted for 53% of all reported fraud. So, how are the thieves gaining access to this information? By hacking, by phishing. Those phishing schemes I was telling you about are spear phishing, social engineering. Be careful what you put out there on social media, credential stuffing. So, what can you do? Since criminals need access to your credentials to break into your account and impersonate you, keeping your online information safe seems to be a good idea, right? It's imperative that you keep this information safe. So how do you keep it safe? Number one, create strong passwords for all of your online accounts, ones that are unique for each account. Don't use the same password on all of your accounts. One that's unique for each account. And if you're getting old and forgetful like me, try using a password manager. So let's take a look at synthetic identity theft. What is synthetic identity theft? As the name suggests, synthetic identity theft involves the creation of new identity in order to create new accounts or apply for benefits. It involves the thief using a combination of fake information, such as a fictitious name, and real data, like a child's social security number, to create fraudulent accounts. So, how does synthetic identity theft actually work? First, thieves will steal a social security number that's not already in the credit reporting agency's database, a virgin social security number, if you will, along with a fictitious name, date of birth, and address that's all controlled by the thief. Combining these pieces of information, the thief would then apply for credit. While the application is going to be denied because this applicant has no credit file, remember he or she is using a virgin social security number. The credit reporting agencies act for just looking for the file, actually creates a file. The next step is for the thief to add the fictitious person name to a legitimate account as an authorized user. Over time, they create a credit history. So the question becomes, well, how are these thieves getting children's social security numbers? Although there's a lot of ways to get a child's social security number, in 2011, as the theory goes, the Social Security Administration switched to a completely random process to create and assign new Social Security numbers. The reason behind the move, the administration believed that it would make it more difficult for thieves to guess someone's number by looking at other public information available to that person. The problem is now that Social Security numbers are not tied to additional data points such as a location or a year of birth. It becomes harder for the financial institution or health providers to verify that the person using the Social Security number is actually the person it was issued to. So now let's take and another thing. If you think that you are a victim of synthetic identity theft, you want to have the credit reporting agencies do two checks when they check your credit report: a hard check and also a manual check to make, because it's going to be tied to a social security number. So let's take a look at medical identity theft. Medical identity theft occurs when someone uses your name, your social security number, or your health insurance records and other PII to receive medical services, to purchase medical products or prescription drugs. Dealing with the repercussions of all forms of identity theft is going to be very confusing. It's going to be time consuming and costly. Medical identity theft, though, is much more dangerous than any other form because it can lead to mistakes being introduced into your medical file that's difficult to undo. Anytime anyone uses your medical record to get services, they're going to introduce mistakes into your file. Like they may not have the same blood type that you have. They may be allergic to medicine that you are not allergic to. And those mistakes are hard to undo. One last thing. You may need to check more than your credit report if you think you're a victim of medical identity theft. You may need to check your medical specialty consumer report or your MIB report for red flags that you're a victim of medical identity theft. So, what is exactly is a specialty consumer report? Well, under the Fair Credit Reporting Act, there's a special category of consumer reporting agencies. And unlike the big three agency, Experian, TransUnion, and Equifax, these agencies are not concerned about your past payment history or the amount of debt you have or how long you've had credit. These agencies are interested in your banking behavior, your check writing history, or the history of you using overdraft protection, how often you bounce checks, your medical and your prescription drug purchase history, your residential or your tenant history. Basically, if your name is attached to a transaction, there's likely a specialty consumer reporting agency that's compiling information about it. There are about 40 specialty consumer reporting agencies that collect, maintain, and sell information about you. And here's the kicker. All of the reports issued by these agencies are free to you once a year. Just like you can get a free report from Experian, TransUnion, and Equifax, the reports from these agencies that collect and sell information about you by law must give you a free credit report. MIB is one of those agencies. If you think that MIB is one of those agencies, and anytime that you have applied for life insurance, disability, or long-term care insurance, you may want to think about getting a copy of your MIB report, and you can do so by calling the number on the screen. Now, let's take a look at scams. Um, Unfortunately, natural disasters bring out scums. Scums hoping to profit off of people's misfortune, folks that are generally barely holding on. So let's take a look at a couple of scams. Disaster relief scams. Now, if you are caught in a disaster, the last thing you need is for someone to file for your FEMA disaster relief aid before you have a chance to do. Here are a few ways to recognize and prevent scams, not just disaster relief, but any type of scams. Ask questions. If a person is trying to sell you something, but they can't answer your question, or their paperwork is not matching the promises that they are giving you, just say no and walk away. Confirm identities. Ask for identification. Call the agency and confirm that he or she works for that agency. Never give personal information to anyone you don't know, and some you do know. Don't trust anyone who offers financial help and then turn around and ask you for money or for personal information. Federal and local disaster workers do not solicit or accept money. And if they are asking for it, you take their name and the name of their agency and you call and you report them. Before you act, stop. Slow your roll. Talk to someone you trust. Talking about it may help you realize whether or not you're dealing with a scammer. Another red flags that you should be on the lookout for to tell whether you're dealing with a legitimate contractor or a scammer. Those that offer that 1 day only discount. This is a 1 day only discount. I have some materials left over from a job I did around the corner. Just say no. Aggressive sale pitches. Just say no. Requiring money up front before they do anything, just say no. If you've never heard of the company and it doesn't have a local physical address, they can't produce a business license or written information about the company. They don't have any references, just a few vague endorsements from neighbors 3 streets over that you never heard of, just say no. Never hire a contractor on the spot. Before hiring anyone to do work on your home, get your insurance company involved and get them in so that they can survey the damage. And Google that contractor. Check them out with the Better Business Bureau or your Department of Consumer Affairs. Don't be victimized twice. Another thing that follows a disaster are mortgage scams. Mortgage scams are also very common. According to AARP, every year closing scams cost home buyers millions of dollars and sometimes loss of their homes. Um, the COVID-19 pandemic has caused a rise in mortgage scams. One of the things you need to know, generally your mortgage servicer, your mortgage lender and your services will work with you. They will work with homeowners, especially after disaster, and offer some form of forbearance or other hardship option. For an example, the Biden administration recently extended the ban on mortgage foreclosure to June. If you need help working with your servicer or your lender, contact a housing counselor, a HUD certified housing counselor, or your legal aid organization for other options. So before a storm or a disaster hit, you need to take steps to reduce your risk of becoming a victim of identity theft. Reducing your risk of identity theft begins long before you put together that little disaster kit. Remember, scammers take advantage of any opportunity they can, and frequent data breaches mean your information is already exposed. It's already out there, probably on the dark web. So, in this new reality, it is smart for you to take steps to prevent malicious actors from using your personal information and ruining your financial life. But you need a plan. Like everything else, you need a plan. I strongly suggest that you make it a habit today, to do some of the following before a disaster strikes. Again, start using those strong passwords on your online account. Use two-factor authentication when it's offered. Use alerts. If your bank or credit card company isn't already notifying you about potential issues with your account, you probably haven't signed up for alerts on your account. Monitor your financial and your medical statements. When you get that medical statement in the mail, look at it, read it. Ask yourself, wait a minute, was I at Kaiser on this day? Make sure you take a look at your financial and medical statements as soon as they hit the mailbox. Be alert to phishing and spoofing scams. Stay on top of the latest scams and know how they work. Sign up for our monthly online scamgram. If you don't know how to sign up, send me an email and I will hook you up. Protect your mobile device. Remember what I said? Mobile devices is now the new scam that they are looking at. Check your credit report, watch your mailbox, and shred, shred, shred. In addition, Identifying and safeguarding the following documents that I'm going to go over will help protect your financial life, especially after a disaster. So before you evacuate your home, make sure you know where the following documents are recorded and securely stored: your social security number, either on your social security card or any other documents, your financial records, your account numbers, your banking information, any type of investment or credit card statements. Know where that information is. Your date of birth, your place of birth, and the birth records of every member in your family. Remember, after a disaster, before you can apply for some certain relief, you need to have this information. It may take you time to get this information again. Your government issued ID, such as your driver's license, your passport, or your permanent resident card. Remember, a valid passport can fetch a hefty price on the dark web, and you don't want it to be your passport that's on the web. Your medical records, medical insurance card, your prescription information for you and every member of your family. Regardless of the type of disaster, most people evacuate a dangerous environment without any record of medical treatments they have received or any data regarding medication. Please, you need to be aware in the event of a disaster, health records maintained solely by your provider can be compromised. One way is one way that you can help do your records is to get a personal health record, an electronic application through which you can maintain and manage your health information. Because of the uncertainty, you need to be prepared when a disaster strikes. A personal health record will allow you to maintain and manage your health information and that of every member of your family in a private, secure, and confident environment. So let's talk a little bit about insurance. Do you need insurance? Yeah, you need insurance. Remember, recovering after disaster could take years. It could take longer if you're not insured. It can take longer if you're underinsured. So, with almost two-thirds of the U.S. resident living in an area where there's a moderate to very high risk of a natural disaster, you need you need insurance. So, in this segment, what I'm going to do is I'm going to provide you with an overview of how you can adequately insure your home. But first, I want you to focus on some steps that you should take before you purchase insurance. Step one, before you purchase a new homeowners or renters policy, obtain a copy of your insurance claim report. You're like, my what? Your insurance claim report. Insurance companies routinely track and share information about their policyholders through two databases, Clue and a less widely used automated property loss underwriting system called A Plus. Your past insurance claims help insurers decide how much they want to charge you for a policy. If the company determines that the odds of you filing a claim is very, very high, they may deny you insurance. So you should fact check your personal property report for accuracy before shopping for insurance, applying for insurance, or renewing insurance, and especially if you think you're a victim of identity theft. So you can order your report by calling A Plus Property. The number's on the screen. Select option two or LexisNexis Clue. Step number two, know how your health plan handles non-emergency care. If you have Kaiser, you have Blue Cross, know how Kaiser or Blue Cross handles non-emergency care. What am I talking about? Know how your medical policy will handle out of network care in the event a disaster forces you out of your service area. What if you have to leave one state and go to the next state? Know how your medical policy is going to handle that out of network care. Step three, before you purchase any insurance, create an inventory of your personal possessions. Many consumers learn after a disaster they didn't have enough insurance for their personal property. Then what? Recovering is going to take that much longer. Make a written inventory of everything that you own. Your inventory should list each item, its purchase date, its value, its serial number, photograph and videotape each room in your house or an apartment, including a closet and open doors. If you have hardware floors, videotape all of that. Create an inventory that you can print, save, or email to yourself or a trusted friend. And also, invest in a waterproof, fireproof safety box so you can store all of your inventory and those financial documents I told you about earlier. Step three, before you purchase a policy, do your research. Before shopping for insurance, know what your needs are. Know what you have and how much you think it's going to cost for you to replace those items. Make your own scorecard. Compare rates and coverage. Look at the company's claim paying history. Are they slow to pay claims? Do they pay claims within 30 days? Are they paying any claims at all? Check the company's financial stability. Your insurance is no good if your company goes out of business. Look at the insurance company profile online. A profile will give you an overall feel of the company's structure and financial status. You'll see things like ratings like AAA for extremely good, or BBB good, or B weak, or you may see a company that says CCC very weak, CCC extremely weak, or are under regulatory supervision. That tells you what? Just say no and walk away. Once you get that policy, read the fine print, lock in a good rate, and look for discounts. When you get your policy, you should read it very carefully. Coverage. You make sure that you have the coverage that you need. Do you know how much it will cost to repair or replace your property? You need to answer that question when you're looking for coverage. Know the policy period, the time frame in which your policy will be effective and which it will expire. So put an alert on your phone for 60 days before that policy is to expire so you can make sure you have that payment in your budget. Endorsements. Check your policy endorsement. Endorsements are also referred to as riders. They can be used to add, delete, or otherwise alter your coverage. Read your policy very carefully. Now let's take a look at the different type of coverage on the standards homeowner or renter's policy. Most of your standard homeowners and renters policy typically cover your personal belongings. And this is, you want to make sure that you have enough insurance that you will be able to replace those belongings. Typically, if the coverage limit for a homeowner's policy, personal belongings is calculated as percentage of the dwelling coverage. For an example, if you insure your house for $100,000, the policy may pay 10% or $10,000 for personal property damage. When it comes to selecting personal property coverage, here's a few things to keep in mind. You want to set your coverage limit that's appropriate for your situation. Use that inventory to help you assess the value of all of your things so you can decide how much personal property coverage you want. Because if your policy offers 10%, you may need it to offer 20%. So you need to let your insurance agency know rather than just accepting what they're telling you this policy has. You may have a couple of Louis Vuittons in there that make make your property personal belongings a little higher. You also want to check and decide what kind of personal property coverage to purchase. For an example, a policy that provides actual cash value protection um, is uh, is the amount equal to the replacement cost minus your depreciation at the time that the property at the time of the loss. On the other hand, a policy that includes replacement costs may help you pay to replace your item at the retail cost at the date of the loss. So, actual cash value is the amount equal to the replacement cost minus any depreciation of damaged property, and they will find depreciation at the time of the loss. But replacement costs will help you replace your item at the retail price at the time that you lost the item. When it comes to dwelling coverage, homeowners insurance covers your building or your dwelling after a covered loss under the policy. But there's a couple of things that you need to keep in mind. It is very important that you make sure that your coverage it matches the cost to rebuild your home. And see, this cost to rebuild your home can go up due to inflation. It can also go up if we're in a strong housing market, or if you made improvements to your home and you did not update your insurance. So don't allow your coverage to be inadequate because you did not increase your insurance as it was needed. Go to our website, type in time for an insurance checkup in the search bar, and download the easy to print fact sheet with tips that you can read that will show you how to make sure that your home is adequately covered. The last thing I'm going to talk about in this area is living expenses. Both your homeowners and your renters policy typically cover the cost of being displaced. Remember, I said you may have to flee your home or your home is no longer safe and you have to live somewhere else. Well, most typically homeowners and renters insurance policy will cover that cost for additional living expenses when it's not safe for you to live in your home. Generally, there's a time limit on the coverage. For an example, in California, policyholders get like 24 months to spend the additional living expense coverage, while other states have set lower limits. Always read your policy, know exactly what coverage you have. If you have to move to another place, to a hotel, know the amount of that policy so that you can budget that money in a way that you will be able to pay that hotel bill until you're able to move back into your home. Exclusions. What are exclusions? Exclusions are things that are not covered under your policy. For an example, flood, earthquake, mudslide, damages caused by a sinkhole are generally excluded from a standard homeowner's policy. I live in California where there are a lot of earthquakes. If there is an earthquake and my house is damaged, my standard homeowners policy is not going to cover any earthquake damages. Why? Because earthquake damages are excluded from my standard homeowners policy. So that means in order for me to be protected, I have to get extra insurance. I have to get earthquake insurance. Now, there's not everyone needs to insure against every risk. So I would strongly suggest that you conduct a risk cost analysis to decide whether or not the risk justify the premium. Most people say, don't get earthquake insurance, put the money in account, but that's easier said than done. So I went out and I got earthquake insurance. After the storm, one of the things that you need to know that recovering from a disaster is a gradual process. Your first concern after a disaster is to check the health and safety for all members of your family. After disaster, make sure that you and your family members and your pets are safe and accounted for. If family members are missing, you want to seek help from first responders. If you have to evacuate, make sure that everyone in that house take their go bag, and don't forget that lock box, that fireproof, waterproof lock box that I told you to get with all of your essential and financial documents in it. Make sure you secure that. Secure your property. If you have damages from a disaster, contact your local emergency manager and see what help that agency offer. If you have a home standing but there is damage, if you can do so safely, secure your property. This may mean making temporary repairs, but you need to be aware of new safety issues created by that disaster, such as gas leak, broken glass, or damaged electrical wiring. Take pictures of all of your damage. If you can, move your valuable items that you cannot secure in your home and maybe take them to a friend's house. If you're going to a hotel, take it there. Find you shelter if you cannot live in that home. If you can still live in your home, but it requires some critical repairs, contact your insurance agent right away. Be sure to take photographs before the work is started. Save all your receipts related to the repair, and watch out for home repair scams and those contractors. If you need another place to shelter, keep track of all of the expenses you occurred during that time. And again, know what your policy limit is for additional living expenses and make sure that you budget so that you will be able to stay at that shelter, that hotel, or that new place that you rented until your place is ready. Contact your insurance agent if you have damages. Document all your damages before you clean up. Take photographs and make a list of all the damage. And by all means, save all receipts. Register with FEMA. To receive disaster assistance, you must register with FEMA because there are different criteria for different types of FEMA aid. You should register even if you have insurance and you think you will not qualify. Now, to register for FEMA, you're going to need some of that information in that lockbox, like the social security numbers. You're also going to need the address of the location where the damage occurred, your current address, your current cell phone number or telephone number, insurance information. Once you are secured, you contacted your insurance company, you register with FEMA, you at the hotel, your nerves settling a little bit. Start now moving to protect your credit. There are tools available that will help you with this. They are called the fraud alert and the credit freeze. The fraud alert is a notation that's placed on your credit file to alert creditors that you could be a victim of identity theft. There's two type of fraud alerts: the initial fraud alert and the extended fraud alert. The initial fraud alert will stay on your credit report for 1 year. This requires creditors to use what the law refers to as reasonable policies and procedures to verify your identity before issuing credit in your name. The extended fraud alert is usually on for 7 years, but in order to put that on your credit report, you would have to provide the credit reporting agency with an ID theft affidavit and a police report or similar documents. Now, your strongest protection is going to be the credit freeze. The credit freeze, also known as a security freeze, is a free tool that lets you restrict access to your credit report, which in turn makes it more difficult for identity thieves to open up new account in your name. Now, a security freeze does not affect your credit or your credit score. It will not prevent you from getting a copy of your free credit report. It will not keep you from applying for jobs or renting an apartment or buying insurance. But it also will not prevent thieves from making charges to your existing account. You still need to monitor all of your bank accounts, your credit card accounts, and insurance transactions for fraudulent transactions. Now, once you've done all you can to prevent identity theft, when it's time to clean up the mess that the thieves left behind, you can do so by doing what? Constantly checking your credit report and disputing fraudulent transactions, accounts, and claims with the credit reporting agency. And most of all, don't become complacent. Some victims falsely assume that once they clean up the damage from identity theft, that ordeal is over. That's not entirely true. It isn't uncommon for thieves to hit the same victim more than once. So protect yourself, be proactive, not reactive. You need to constantly monitor your credit and be vigilant against attacks. And this means taking care of guarding your sensitive information, your sensitive accounts as well. Here are some resources that you may want to go to our website and download and take a look at: our identity theft and account fraud module, disaster coverage, freeze your credit file. That's some great information there that will give you a little more information than I provided. Just say no to scam. And our COVID-19 educational project is just loaded with tons and tons of resources. Again, my name is Linda Williams. My email is there on the screen. If you have any questions at all, please feel free to send me an email. Thank you again for joining me today, and I hope to see you soon.